Right. Morning, everyone. Welcome back to our Morning Kappa at 8. Joseph here. Right. Hope you had a very good weekend. Today, we have apart from the market updates, um, we have one Insti report, price metal, right? Iftar have upgrade the target price. Afterwards, I'll present on behalf of him. Secondly, we have a trading idea that published by Queenie, and Queenie will come on board shortly after Sian. Just remember to stay online. So let's start off with the Hang Seng Index. You can see that the Hang Seng have pulled back sharply on the Friday. So over the last week, the market is concerned on the AI spending, and that cautious sentiment have spread across the Asia to the Europe and US as well. So on the Friday sessions, we do see a strong pullback in the tech stock at the Asia market, especially the Hong Kong ones. But overall, the support still remains at 25,000 point. We view this latest corrections as a temporary pause, right? I'll still keep a bullish bias unless the Hang Seng break below 25,000 point level. So over the week, undoubtedly, right, the tech stock have experienced a strong selling pressure like Alibaba 9988, Xiaomi 194, right? But we do see that the commodity stocks as well as some of the like oil and gas, right? The aluminium counters has been holding up the market, and some of the small cap counters also experience buying pressures as well. You can see that this on the all Hong Kong companies heat map, right? Looking at a 1 week basis, right? 1530 went up by 11%, 1209 11%. These are not the Hang Seng component counters. But look at the Hang Seng component, we do see that the bank remains on the positive territory, right? 9961 trip.com 5.4%, and another oil and gas 857 Sino Petrol 3.66%. So you can see that this under the Hang Seng component counters, the tech stocks are actually the casualties last week, right? So if you're focusing non-tech stocks last week, it should be good. But I think that after the Trump had a dinner with the US uh, uh, um, big companies, right? Probably sentiment can become a calmer this week, right? So same goes to the all Hong Kong companies, right? We do see that the big caps are moving down on corrections, but the small medium cap actually still holding up the market, right? Especially the EV sectors as well as the some of the commodity and uh, the green renewable sectors. Okay, right. Let's move to the next one. You can see that the Hang Seng, sorry. Right, for trading stocks this morning, firstly, we'll be looking at the uh, Shenzhou International, right? Stock code 2313, right? Shenzhou International, right now, uh, we can see that the uh, resistance level is at 78, followed by the R1 at 74, right? After break past the 70 resistance, right? The setup remains bullish so far. Okay, and the downside support is marked at 67 cents. Second, we have the JDF International 6618, which also break past the 65 uh, resistance, now heading towards 72 and followed by 80. So downside support is at 60 level. So these two stocks, if you look at the trading view, the trailing PE is not that expensive. Both are below or need around 20, and Shenzhou also are giving about 4% dividend yield. This is based on the past 1 year performance, right? Nonetheless, looking at the technical picture, right? Shenzhou has been showing a bullish setup, and the JD Health have shown a very strong breakout so far. So looking at the S&P 500, right, over the week, right, the picture are slightly different. I can see that the AMD still lead the tech stocks. Now, last week, AMD have released their results and followed by their briefing, right? If you look at their briefing, the details, right, the company have give quite bullish outlook, right? And so AMD is leading the market so far. I think this week, one of the biggest event would be the NVIDIA results that's going to announce middle of the week. Nevertheless, last week, we see that the memory counters continue to lead the market together with Cisco, which released their result on the Thursday night. Now, another counter that I would like to seek your attention is actually LLY, right? Eli Lilly, right? On the on the July month, right? They actually deliver a par results as far as the share price actually came down. But this coming October, right, the result was above expectations, and from a very low price, the share price have actually went up. So this is what I want to share with you in the US market, right? 1 quarter of display performance may give us the opportunity to buy, right? If you look at the stock near the support level. So the following quarter, as long as they give above expectation results, the share price will resume on the upside performance. Um, so this quarter, I think one counter actually came down quite a lot. It's actually Dash Door, right? DASH, all right. The share price have actually came down. But look at Dash. Recently they are going for M&A to boost their earnings as well. So do read out the M&A and look out for the technical chart support resistance. Where is the level to positions for Dash Door again, right? And so last week we shared about two counter EQT and Datadog, right? Can actually look back on that. And as for the FKLI, we still pull back over the week, but the support level remained at 1570. Um, Slightly above the 2 days moving average. So as long as the FKI stay above this level, the overall technical setup remain bullish. Now FCPO continue to be moving sideways, and today 17th of November, they are going to move to a new contract month for the active contract. Let's see how it perform after this new cycle. But generally, we still keep a bearish bias with 4004 as our upside resistance. Okay, and look at the Malaysia market as a whole on the weekly basis, right? You can see that our big cap stock are actually quite sideways, led by the press metal over the week, give a 2.55% return, Gamuda 0.58, and Maybank 0.2%, Genting Malaysia 1%, CMB 0.6%. So you can see that the big cap stock are rather sideways. Only the Speedmart have a standout that give a 5% return on the blue chip counters. So apart from the blue chips, the high volume trader counters like Tenko, FNN, the uh, Lufu, right, and others. But generally, performance are rather mixed last week. Okay. So for technical pick, firstly, we look at the Tenaga National, right, which are testing the resistance at 1350. So a breakout happened, Tenaga will climb towards 14, followed by 1430. Downside support is 1320. Now, secondly, we have JPG, Johor Plantations Group, which they are breaking past their 1 ringgit and 55 cents. So if the breakout happens, sustained, right? GPG will be climbing towards 1 ringgit 65 cents and followed by 1 ringgit and 70 cents. Downside support is marked at 1 ringgit and 50 cents. So let me spend another 2 minutes on the press metal notes. Hang on a bit. The So Iftar have written a note on the press metal, right? And Meanwhile, he have actually increased the target price 12% to 7 ringgit and 20 cents. So look at the thesis on the press metal, right? One key thing is that he do see that press metal is going to announce their quarter results, third quarter result on coming 20th of August. So at this moment, the valuation is fair, despite that the press metal is approaching the 3-year historical mean at 22.7 times, right? In his view, right, the valuations remains compelling right now. And one of the key important thing that he's looking at is that the right now the supply remains slightly deficits. So the global productions remain subdued, right? For the first 9 months of this year, it only managed to increase 1%. And China is nearing its production cap, which is 45 million tonnage, right? Outside of the China, especially US, right? The smelters are facing the rising competitions because of the shortage of electricity. So right now, what he do see is that the aluminium price is actually moving upwards, and meanwhile the feedstock, which is the alumina, is actually coming downwards. So that could actually help a little bit of the margin side, but despite that, he do see that the another feedstock, which is the uh, carbon anode price actually went up slightly, right? So all in, right, he think that the productions will stay limited on the upside, but demand remains strong. And right now, the LME, the inventory also actually comes down. So right now, you look at the aluminium market, what is actually happening right now is what we call the supply deficits, with demand stay strong, supply stay low, right? Aluminium price continue to see an upside potentials. So all in, we shall see what's going to announce on this coming 20th of August. But at this juncture, IFTA have raised the 25 and 27 earnings by 12.5%, 14%, and 13% respectively. Now, based on his DCF model, right, his latest TP is at 7.20 which imply a 12% upside. Okay, so I'll stop here and I'll pass the stage to Sian on the Mingguan, Rasa Mingguan. Thank you.
Thanks, Joseph. So, good morning, everyone. So, just a quick update of what we have actually included in our latest weekly Rasa report. So, basically, we are seeing that the RHB risk sentiment index has consolidated higher over the past week, but still remain below 1, thus signaling investors relatively neutral or a risk-on approach. So, we do attribute the investors shifting of rate cut expectations to be the core reason behind the recent equity downside. In this week, risk appetite will be mixed based on firstly, we are seeing some upsides from the uptick in specific ASEAN data. And on the other hand, we are seeing that it might be dragged by firstly, market expectation for poor US labor data, and also the further pricing out of US federal fund rate in December 2025. So US shutdown ends its longest impasse in history after 43 days, with 7 Democrats and 1 Democratic aligned independent candidate breaking away from extending Obamacare subsidies. So we think the shutdown race will soon be priced out, especially given the equity rally, even during the shutdown period. So do note that government estimates expect nearly a 1.5 percentage point decline in real GDP growth in the current quarter, which will be largely recovered. So our constructive outlook for next year is further supported by recent robust ASEAN data, suggesting a strong year-end performance. So we have upgraded Malaysia GDP projection for this year to 4.7%, so versus our former forecast of 4.2%. So Indonesia's and Thailand manufacturing PMI, on the other hand, both accelerated in October. So while Indonesia GDP and export growth exceeded expectation in the latest release. So separately, our view remain unchanged for the federal fund rate to stay unchanged in December on the back of our in-house Taylor's rule model. So all eyes on China setting its long prime rates on 20 November. So where we foresee no change in the 1 year and also 5 year long prime rate, where 1-year loan prime rate is likely to maintain at 3% and the 5-year loan prime rate to maintain at 3.5%, which will mark the 6th straight month of inaction despite the US federal fund rate cuts, which has been done by over 50 basis points over the same period. So the implied policy trajectory suggests that China will maintain its main rate, which we refer the 7-day reverse repo for at least the next 12 months. So closer to home, we have also seen that there's a release of Malaysia third quarter GDP print, the final print estimates, which was released on last Friday. And the third quarter final GDP printed 5.2%, which is similar to the advanced print where it is released on last month, and also higher than second quarter GDP growth of 4.4%. So which is in line with our in-house projection and also Bloomberg consensus estimates. The economy expanded by 4.7% for the first 3 quarters of the year. So in line with that, we have also revised our 2025 GDP growth forecast of Malaysia to 4.7%. So versus our former projection of 4.2%. So we forecast the GDP growth at 4.6% for the fourth quarter. So given the firm domestic demand and easing tariff risk. So for next year, we still maintain the GDP growth projection for Malaysia at 4.7%. So our revision is predicated on several factors. So firstly, we are seeing that stronger than expected mining sector output on year-to-date basis, post-planned maintenance. Secondly, robust manufacturing sector output, and also upsides from higher net exports, where the export has improved as per the recent data. So the domestic economy remains resilient, supported by firm consumer spending and steady investment. Our optimism regarding the external demand and also manufacturing outlook for this year and next year increase. So following the easing of tariff risk and also the continued robustness of E&E exports. So in a separate line, so the third quarter balance of payments data was published alongside, which show a current account surplus of 2.4% of GDP. So compared to the second quarter print of 0.1%, where we are seeing that there's a higher goods surplus, and also the services account turned into a surplus for the third quarter. So that's all from me. I will pass the line to the next presenter. Thank you.
Thanks, Sian. Good morning, everyone. Today we have a training idea on iCents Group Berhad. So iCents Group Berhad is involved in the construction and engineering of clean room and other facilities. Truth is subsidiary called VC Engineering, and it also involved in the manufacturing of clean room. Truth is subsidiary called Maytag. So the first investment thesis would be number one, from its clean room and other facility construction arm, which is VC Engineering. As of end October, it has an order book worth 60 million to be recognized for FY26 and a tender book value at 600 million with an estimated 35% hit rate. The pipeline includes several hyperscale data center projects, setting the stage for robust growth from a low base. It has also seen a surge in semiconductor-related tenders, including new front-end clients that demand higher cleanliness standards, translating into premium margin contracts. Roughly 40% of tenders are derived from fast-track DC jobs, 40% from semiconductor contracts, and then the remainder from the pharmaceutical and F&B industries. Meanwhile, the listing proceeds and its public listed status further strengthened its capacity to pursue larger, higher value projects. Next, we see strong momentum from integrated clean room manufacturing arm, which is a subsidiary called Maytag, which operates mainly on a purchase order basis, fields robust inquiries from record high RFQ, request for quotations. Its recent expansion into Vietnam DC market and its plan to boost production capacity should drive further growth. Going forward, Maytag will focus on expanding external sales to third-party clients. The continued growth in this business is important as it brings margins that are 5% higher than that of construction arms and enhances the group's overall sales mix. So iCents is well positioned in the high growth PC and semiconductor industries. Between 2021 and 2024, Malaysia attracted 114 billion in DC investments, with 34 facilities operating and 33 more underway as of June 2025, according to Digital Investment Office. At the same time, US-China tensions are pushing chip makers and also players to diversify into Southeast Asia, which is an attractive option due to regional neutrality, various countries' business incentives, and lower costs. These trends should sustain the demand for high-spec clean rooms and facility engineering works, thereby positioning iCents for solid long-term growth. Okay, so both Maytech and VC Engineering are well positioned to capitalize on the structural tailwinds from accelerating DC investment and midterm semiconductor sector recovery. So these drivers are expected to propel iCents earnings at a 45.7% CAGR earnings growth over FY25 to FY28. So it is right now trading at an attractive FY27 FPE of 10.5 times, which is attractive compared to its peer average of 24.5 times, as we shown in our peer table in our report. So in terms of valuation, in line with Bursa Malaysia's Industrial Production and Services Index, we ascribe a PE of 18 times on CY26F earnings to derive a fair value of 64 cents. So key downside risk for the forecast and recommendation will be project delays and a slowdown of the DC and semiconductor industries. Okay, so with a fair value of 64 cents, it implies a potential return of 49% from the latest closing price of 43 cents. Okay, so that's all from me. We will end our session today, and great to have all of you today. Thank you, everyone. Hope to see you guys again tomorrow. Thank you.